Hey guys. All right. So my name's Steven. I trade in the options cartel Discord with Sean and Will. As you guys may or may not have seen, I post my weekly scans in the expert plays section, and these are typically like journal entries that I do in my TradeZella that kind of log not only what I'm looking at for the coming week, but they also kind of recap my week in review as well as my thoughts on the general market going forward, kind of like market breadth, structure, the health of the market, what are the leading themes and sectors and industry groups that I think are positioned to outperform. And then I look at all of this and try to formulate a trade plan, basically looking at not only the health of the market, but like I said, also individual names from a fundamental CanSlim perspective, as well as technical trading plan that is very very similar, if not identical, to what I've learned from Sean. So these these trade plans that I post are quite long. They're quite lengthy, and I figured that doing videos is actually just a bit better way to kind of make this more accessible for people. They can listen to it, or they can watch it or listen to it in their car or whatever. So I'll just kind of dive right into it and start at the top. Looking at the for last week, SPY broke out of its weekly base here. I'm going to turn these drawings back on, but if you look and see, SPY broke out of its weekly base on higher volume, which was a good look. I think that from a volume perspective, the SPY looks a bit healthier than the Qs. We did end up having a distribution day on Thursday, which was only the second distribution day for SPY. And but on Friday we did close the week at the highs after a gap up, and we put in a doji candle on lower volume, which is kind of a good resting look for the SPY, but it is a bit extended from the 5 and 8 EMA, so we probably could see a little bit of like slowdown, a bit of digestion here would be healthy. From a volume perspective, like I said, I believe that the SPY looks a bit healthier than the Qs, and I'm going to tell you why. One is this. So if you look back here, this pink and blue line, these are the 100 and 200 day moving averages, respectively. On the 23rd, May 23rd, we pulled back here and bounced off of these, which is also kind of like the same spot as this 575 weekly support level. And that was not only there, but the 575 weekly support, but it was also the half gap fill. It was a 50% retracement on the Fibonacci extension, or Fibonacci retracement from this first higher low and to the move up, as well as the 100 and 200 moving average. So we kind of reset there, and that was a good breather for the SPY. And I think that's one of the reasons you're seeing continued push higher without some of the exhaustion signs that you may see from the NASDAQ. When you flip over to the Qs, you kind of see we've definitely got a bit more, definitely looks a bit more gassed in terms of the volume perspective. So, we have 4 distribution days, one that was on the May 21st, another one that's on May 22nd, immediately following, another one on May 29th, and then we put the last one in on Thursday. We've maintained the trend line going forward ever since, but this last distribution day that we put in on Thursday, I think, is largely a result, I think everybody knows, is this the kind of huge sell-off that we saw in Tesla. And this kind of brings me to my next point, which is that when you're looking at the NASDAQ and seeing that you've got these 4 distribution days, it gives me cause for concern too. I mean, I have a small SQQQ and dated QQQ put position just for a little bit of protection, because frankly it did look like we could continue get some selling here. But when you look under the hood and try to figure out where this selling is really coming from, you see that it's really not as bad as it seems. It's not like tech sector wide. If you look at the NASDAQ equal weight, you see that the volume profile or the volume patterns are actually a lot more constructive, because this huge distribution day that occurred on Thursday, we don't have that same kind of volume that we do on the Qs. On the Qs, that distribution day occurred on huge volume. On the NASDAQ equal weight, the QQQE, we don't see that. Why? Well, the reason why is because a lot of that selling was heavily localized into Tesla, which makes sense. The CEO is going to have a public meltdown and just kind of collapse in real time, lose a tremendous amount of market cap in a day. If if Tesla has but 3% weighting in the Qs, that's going to have a huge effect. And sometimes you get a bit of the tail wagging the dog effect too. Tesla starts to collapse, and then the Qs sell off. The Qs selling off causes Costco to sell, which Costco is, got another 3% weighting in the Qs, which then caused the Qs to sell even more. And so, it's a bit of a kind of a domino and tail wagging the dog effect. And then that's the reason why I don't think that we got really much follow through the following day. Even if you look at the Qs, the next day we gapped up and, kind of held really kind of gapped up and opened at the previous day's open and held that move throughout the day, which was a good look. You look at the NASDAQ equal weight, you just don't see that kind of alarming selling volume here. And so I think that's a good look, particularly on the weekly. Weekly looks constructive. On the RSP, which is the S&P equal weight, you're seeing the same thing. It's actually an even better look. We have this EMA launchpad, the 5, 21, and 50 EMAs, all kind of curled up and converged here on the weekly chart, and the S&P, the RSP, makes a big move with volume off that spot. I think this is a good look for the S&P going forward into the coming week. Looking at the IWM, I think, this is a fantastic look. If you look on let's pull up this and look at the daily chart, we can kind of see this inverse head. This is a great look going forward. We've kind of basically filled this entire gap, which we had down until Friday, May 23rd, filled that gap, and then have pushed higher, consolidated above all of the key moving averages, above the 8, 21, and 50, and then we've pushed out. I did take a couple of stabs at IWM over 209, got stopped out on both of those, and then as you see, we just on Friday, gapped up, never gave you another shot to get back in, never retested, and just kept on going. But I do think this could be the start of, like what everybody's saying, is kind of a small cap summer. And I think that you will see a bit more health in this rally as you get more participation from the small and mid cap stocks. Going forward into Bitcoin, this is something, I'm not a big crypto trader. I don't trade crypto, but I do watch and look at the Bitcoin chart as just kind of a risk proxy. It kind of is a good indicator as to the market's appetite for risk. There are some crypto related names that I do like trading. CEP, MSTR, for example, Hood, Coin. And I think this is a good look. This OOPS reversal on Friday the 6th, kind of hammering right off the 50 EMA, which was basically put in a hammer candle on the weekly chart off the 8 EMA. Lower volume, but improves the momentum. I think this is a good look. I think that over 107, this is constructive to look to a move into previous all-time highs and hopefully new all-time highs. But you see, as we kind of bounced off the 50 EMA here, we reclaimed the converging 9 and 21 or 8 and 21 EMAs and push. That's going to set us up for a good move higher. Touched on the equal weight RSP and the NASDAQ. One thing that I also look at too is the percentage of stocks above key moving averages. I don't know if people track this, but I certainly do, because I think it's a good indicator of market participation. If you zoom out, you can see that this is like a range-bound indicator, right? Just kind of moves in this range. And I've notated here, in both in terms of like the color of these lines and the thickness of these lines, like the importance here, because the market, when it gets too extended to one side or the other, it's going to tend to mean revert. And when you're seeing is, right here when we got around the April 7th mark, that was a ton of stocks that were below their 200-day moving averages. And when we got the 90-day tariff pause, this pushes us up higher, and we're starting to see that now we're right around 44% of stocks above their 200-day moving averages. Ideally, where this is really going to look really healthy is when we kind of get above the 50% line, and when we live somewhere between 50 and 65% is really when that's a lot of stocks participating above their key 200-day moving average, and it's not so many that the market is frothy, but you want enough stocks above their 200-day moving average that things are in an uptrend. What you can start to see now, though, is that if you look at the shorter term bias, the 50-day and the 20-day, we got about 70%, 73% of stocks above their 50-day, and about 60% of stocks above their 20-day. And so this is probably, like, this number having gone down in the recent weeks, or the recent week, is likely a result of kind of some of that selling that we did see as a result of like that distribution day on tech. Tesla selling off, that probably pushed this number down. But what you're seeing is that, like, in the nearer term, some of the shorter term moving averages, the 50 and the 200, the 50 and the 20, we got a lot of stocks above that. So this is kind of telling me that there's we're starting to see stocks that weren't participating in the early part of this rally start to curl up, and then once those names get above their 200, that's when this is going to start to look like we've got a lot of participation going forward. Looking at the VIX and the UVXY, this is not what you want to see if you're a bear, right? We pushed up higher on that big sell-off day on Thursday. Like I said, that was really catalyzed by the move in Tesla, and we couldn't reclaim or hold above the ADMA. If you're a bear, if you think about the daily sequence of this, you want to see this really bullish move off the lows with volume. You want to see continuation on that. And the fact that we couldn't continue to push the VIX higher is really kind of an indication there's just not a lot of sustained power or conviction from the bears. We immediately sold off on this candle and pushed down towards the lows again. I would say that in the near term, I'm going to probably put an alert here on this for myself, is that, like, I would want to be aware when the VIX or the UVXY, I prefer to use the UVXY because it has volume as opposed to the VIX, which doesn't show volume. But I would start to look and want to know when the UVXY starts to approach 1950, because I really think that we would probably start to see a technical bounce there, and that might be a good indicator that we might start getting a bit of a pull in on the indices and some individual names. Other risk-off indicators, a bit of a concern that the 10-year poked up about above 4.5. This happened on Friday. So there's so many other good things happening in the market that look really bullish, but this is something to be concerned about, right? Because as this starts to move up, and particularly, I mean, if you're looking at it on the weekly chart, like, that's a bullish look on the weekly for the 10-year. And if this starts to move up into 4.6, 4.7, that's really when we're going to start to see it put more pressure on equities. So this is a helpful thing to keep an eye on. It doesn't mean to panic right now. The market is, as I can tell, is like innocent until proven guilty. This looks good, but this is something to keep my eye on. Another thing that I was keeping my eye on that was giving me a lot of concern was the setup in gold. Gold looked incredibly bullish into last week. Kind of was getting over this my appropriately titled threshold here, and you can see that not only did we fail the first time, this was last week, this was 2 weeks ago when we finally got over this kind of pivot area. We failed the very next day. We consolidated again above the moving averages, pushed higher, and then failed again. And if you're long tech or more speculative names, this is sort of the thing you want to see, right? There were some other names that I was tracking, like Orla. You can see, I wanted to get long this name here, missed it because it gapped up. It just made a monster move and then immediately failed on Friday, which again, great news if you're long tech or other speculative equities. Other names like Royal Gold did the same thing. Breakout, consolidated. This looked like it was getting ready to make a move higher, failed. This is exactly what you want to see if you are, like I said, long tech or some other names like that. The move in silver also, this is the one, like I said, gold is starting to fail, but the move in silver is also concerning. Silver generally is like kind of lags behind gold a little bit. Gold will generally tend to make its move first, and then silver is a little bit further behind. Silver is definitely surging right now, and so some of these mining names, it's no surprise why these have been like top of the list in terms of like industry group relative strength. The miners have been, and so when you start to see these moves in gold and silver, it's no surprise as to why. So this is another thing I'm keeping on my list. If this move sustains, I like a name like PAAS. Pan American Silver Corp. I'm certainly not going to buy it here, but it's super extended, and even from the 5 EMA, I think this is like if I looked up the ATR, 3.5% ATR. Yeah, this is like it's like two ADR, 2 ATR away from the even the 8 EMA. So there's no way I'm buying that there. But moving on. Another thing that I have been keeping my eye on is a bit concerning, or was a bit concerning, was the U.S. JPY, the yen. I kept an eye on this. I am not an economist, right? I'm definitely not an economist. I am not an incredible macro trader, like a Soros or a Besant. But what I do know is that back here on the weekly chart, if you go all the way back to August 5th when the carry trade flash crash happened, this is the level, the 144 to 142, 140-ish area, that when the yen hit that is what kind of caused the liquidation that kind of carried forward into equities, and we got this massive dump in U.S. stocks because of the yen carry trade collapse. If you want to look up more about that, there's plenty of videos. I'm not the best one to explain it, but this is something that I keep an eye on. I don't know if this level correlates with another risk to the carry trade, but I do know that this is the level that we got to when that collapse happened, and so I do keep an eye on it for that reason, right? For what it's worth, we did bounce off that level, and we have been putting in higher lows, and so now we're kind of starting to move up again. So if this is an indicator as to the health of like the risk on appetite for the market, which is like the carry trade is absolutely a risk on trade, then if this is moving forward and moving in the right direction, then that should be good for risk names going forward. Moving ahead, trying to look at some sectors and leading industry groups. I'll pull up my sector ETF list, and some of the ones that stood out to me. This is the Aerospace and Defense ETF. This one is super strong on the weekly chart. You can see just kind of, I mean, we've even gotten some separation here from some extension from even the 5 EMA on the weekly. We got a blue dot in terms of the relative strength line on the daily. Like this is going to be something that this to me means aerospace and defense stocks, if they're not extended and they are setting up from it like in a technically sound perspective, and they are it is a name that from a fundamentals perspective that I want to be involved in, this should mean that these names are at the top of my watch list. Another one that's setting up is XLC, the communications ETF. This is again setting up really bullish on the weekly, breaking out on the daily chart, RS line peaking up. This means the communications names are going to have my attention. Same thing with industrials. This is setting up super bullish. Anything in the industrial sector is probably going to be a good look as a result. Financials, the XLF. Shouldn't be any surprise when you see a setup like this with just a pullback into the EMAs, setting up and basing right there on a key level, holding the 21 EMA and starting to break out with the relative strength line peaking up, and the weekly chart being set up in just like, what was this? It's like they're not inside. It was basically 2 inside weeks on this mother candle here, but yeah, it shouldn't be a surprise why there's so many great setups in banks. Banks, investment banks, and brokers all look really good. There's a few of them on my watch list. I can go through that. And then XLK, probably the most important ETF in the SPY or in the market, is the XLK, the technology ETF, and this is looking pretty good. Giant cup and handle on the daily, pulled back into the base to test the 200 moving average, reclaimed the 8 EMA on the daily, and then positioning for a breaking out higher, relative strength line ticking up. This is exactly what you want to see if you're long speculative tech names. Another good thing, some weakness in the XLP, the consumer staples ETF. You have to go all the way down here to see the relative strength line. But this relative strength line curling down, pushing down is exactly what you want to see if you're trying to, like you said, get involved in some of these more risk-on names. Consumer staples, the just to give you an idea of what this is like the Walmarts, the Costco's, the Procter and Gamble's, the Johnson and Johnson's of the world. These are the names where money goes to hide. Big institutions, institutions are what move the market, right? And institutions are not like you and me and the people that are watching this video. They can't just go to cash, right? They are mandated to be fully invested or nearly fully invested at all times. And so if there's weakness in the economy, perceived weakness in the market, they can't just go to cash. They have to pull their money out of one sector and rotate it into another sector. And so this is typically where that money goes when things are looking scary. And so seeing this sector of the market being weak is a good thing for the broader health of the market and a push higher. All right, guys, so I hope that gives you a little bit of an understanding of my view of the market, how I see things, of how they've played out last week, and it gives you a bit of an understanding of my view on the market structure and health. Obviously I'm bullish on the market. I think that it would be healthy if we pulled back a little bit, but in the near term I am bullish, and so I'm going to show you a little bit about my approach into finding sector rotation and the strongest leading industry groups and the strongest sectors, and then finding the strongest stocks in those sectors that I can look to trade into the coming week. So I'll just kind of show you a little bit about how I do that. So if I head on into Market Surge, the way that I like to do this is to open up this panel at the bottom of the screen. I'll click on sector rotation and industry groups. This is this leading industry groups list that I've made, but you can also just click on the markets and 197 industry groups. I like to use this because I've created some custom tabs at the top that show me a little bit about what I want to see. And the way that I like to do this is I like to sort the industry groups. There's 197 of them, and I like to sort them from industry group rank, with the strongest being at the top. So you can see here that the industry group at the top is list number 1, and you can also see that these descend as they go down. So the ones here at the bottom of the list, are ranked lower in terms of their relative industry group strength. Now, what I like to look to see for is I like to see these groups that are ranked really high right now, but specifically that were lower and ranked rather poorly 6 months ago or 3 months ago or last week. And this shows me that there's upward movement, there's progress in the relative strength of an industry group. So if you take, for example, medical hospitals, you'll see that this was ranked 176th out of 197 just 6 months ago, and then 3 months ago it climbed up to 165, and then now it's sitting at 9, and then now it's 9 right now. You're seeing a lot of this, specifically there's IBD gets pretty granular with their number of industry groups. So even as we go back into my watch list, you'll see that there's some medical names in here, and that they don't all fall into the same industry group, but they're kind of adjacent. They're medical related. And so you're seeing that too with this. Like this is medical hospitals that's made this advancement in industry group rank from 6 months ago up until today. But you're still seeing the same thing with medical, for example, wholesale drug suppliers. This was ranked 148th 6 months ago, and now it's ranked 17th. Okay, you're seeing the same thing. Medical services, right here. What does this say? It was this was ranked 119th 6 months ago, and today it's 25th. So you're seeing this shift, this broader shift in medical outpatient home care. 145, then it's 40th, and now it's 35th. So you see this, like there's a bit of granularity. They get pretty specific in terms of the way these industry groups are codified inside of IBD, but they're all kind of in the same medical universe, and there's this shift in relative group strength. So this is something that I keep my eye on. So what I do is I typically will go through and I will filter through the top 50 industry groups. Or really like the top 80. I really only want to be looking at stocks that are in the top half of industry group relative strength. And then I focus on specific fundamental criteria to find the strongest stocks in those leading industry groups. And then from there, I will go to the charts and then look for strong technical setups on those strong stocks. So from the top down, groups matter the most, the market matters the most. Then I'm looking for strong groups, and then I'm looking for strong stocks in those groups, and then I'm looking for technical setups. That helps me narrow down my list to find out what I want to trade. All right, so let's look at this. So I will narrow this down. The way I do that is I've got a scanner. I've got a couple different kinds, but like high RS wide, this gives me 643 names. High RS gives me about 100 names. It's pretty quick to click through. And then I have my super restrictive scan, which is basically in a perfect world of all the things I could have. I call it my improved one scan. So William O'Neill improved one scans, 15 criteria. I don't scan with this. I use it to check against the names that I'm finding in the high RS scan. The reason why is because it's so restrictive that there's only, this is true, there's only I think 4 or 5 stocks in the entire stock market that meet all 15 of these criteria. So it's very, very restrictive. But if, let's say, for example, I go through my high RS scan and I pull up this list, and then I sort by EPS rating or I sort by comp rating. Sorting by comp rating is typically pretty good. And then I go through and I look on here, well, this meets AEM in the minor space. It meets 14 out of the 15. It wouldn't have shown up on this scan, but if it's meeting 14 out of the 15 criteria, most restrictive criteria, it's definitely a name I want to pay attention to. I'm not looking at AEM this week. Why? Because gold is failing to break out, and I will keep AEM on my watch list. Same thing with Royal Gold, and same thing with if gold starts to peak back up again. But for now, this is taking a back seat. I'm only more looking at that sort of name for like a rotation to see if there's rotation taking place back into gold. Then I will turn my attention towards those sorts of names. But for something like this, like CCJ, like I mentioned, they're really hot sectors right now. The really hot themes right now are aerospace, nuclear, software, all sorts of different kinds of software, investment banks and brokers, payment processing, semiconductors, and some medical names. So why CCJ? Why Camco? Well, this is a uranium miner, right? And it has fantastic fundamentals. It passes 14 out of the 15 criteria. So these are the sorts of names that are going to get added to my list. As you start looking at what shows up here on the high RS list, you start to see a pattern, right? There's mining, there's some retail, there's aerospace, a lot of aerospace, more mining, finance, software, more mining, software, finance, semiconductors, aerospace, right? It's more defensive, more defense stuff. Banks, it's finance, utility, NRG, which is in utilities, but that's a nuclear play, and more software. So there's a theme, right? And so I basically go through here and I look to find the strongest stocks. This is helping me find these strong stocks in these strong sectors. The themes sort of just show themselves like a sore thumb, and then I add them onto my watch list as such. Now, I'll add them and categorize them in my watch list under the theme. And I try to not have more than a handful of names in each theme. And when I do, I try to give myself a quick reference. And the way that I give myself that quick reference is with the flags. If I flag something in blue, it means that I've scanned it here in IBD in Market Surge, and that it's coming up like A+, like HEI, for example, right? GI is this is an aerospace defense name, relative strength blue dot. It's coming out of a squeeze on the weekly chart. The weekly chart looks amazing. High volume on the weekly on earnings. It's forming this high tight flag. I'll go into that in a second and why this high tight flag is so important to me. But if I look in here, HEI, well, check that out. 12 out of the 15. There's a lot to love about this stock, right? Tuck this back in here and scroll down here. Sales increasing, EPS increasing, sales increasing. The number of funds is near or over 1,000. 60% of the float is owned by funds. 15% return on equity. Or a single-digit earnings stability. That's great. I mean, this is the kind of thing you want to see from an earnings curve. And look at the imbalance between the shares outstanding and the float. Another really good thing. Right? This means that there's a supply-demand imbalance, right? What happens when demand starts to outstrip supply? Well, price follows, price goes up. So this is one that I'm also taking a look at. And so because this has got really great fundamentals in Market Surge, When it makes it onto my watch list, I mark it with a blue flag. So what we'll do from here is I'll kind of show you guys the looks at these. There's a couple of names that kind of fall into their own sectors. Quantum, I do have a small starter on QBTS. This is something I'm looking to break out. I think that this was a huge move, and I think this move could only just be getting started. So I have a starter here in QBTS around the 1750 mark, and it did break out towards the end of the day. If this gives me an opportunity to get back in on Monday or Tuesday, by retesting the 18 level, gladly do that. Uber is another one. QBTS, because it's a speculative name, you see it's marked as a yellow, right? So it's got a great technical setup. It might be in theme, but for me, I just want to mark it as yellow, so that way I know, like, hey, this isn't like an A+ can slim name. This is more like there's a theme here, and there's a lot of money flowing into the stock, and also it's a great technical setup, so I just kind of mark it as a yellow. Uber, I'm marking this blue because in Market Surge, checks an awful lot of the boxes, right? Check huge fund ownership, and I think here Uber bouncing off of the 50, this weekly level, the 50 EMA over the 1850, the 8650 level is also something that I'd want to be involved in, because it's, again, above all the key daily moving averages, and on the weekly it just looks fantastic as well. Looking at aerospace, so we'll start here and go down. HEI, already told you why I think this is a really strong name. This specific technical pattern reminds me an awful lot of, let me move this out of the way, reminds me an awful lot of Dave and what happened with Dave. It reminds me of Sezzle. Sezzle formed a high tight flag and just exploded. It reminds me of Groupon. That looks identical to Groupon. This high tight flag on HEI looks identical to Groupon. And Groupon, how did Groupon do? Well, when Groupon broke out from this high tight flag, it moved 24% in 12 days. Count me in. I want to be involved. It's hard to get involved here because of these dots here indicate to me that this is very, very extended from the 50 moving average. So that's something I want to consider when I'm looking to get into a stock. I don't want that much extension. There's a bit of extension here on HEI, so that has my antenna up. I don't know how this might trade a little thin, so I don't know if this has got a very liquid options chain, but over 303.32 could be interested. CLS, this is also one, not terribly extended from the 50. It's about 380 R away from the 50, 98 relative strength line. Again, if you flip on over to the Market Surge chart, CLS, I'm not going to do this for every single one, but you see why this is marked with a blue dot, or what is marked with a blue flag, because this passes 14 out of my 15 requirements for a fantastic can slim name. 43% EPS growth rate. Anything above 25 is considered fantastic. Return on equity, 25%. Anything above 20 is considered great. EPS rating of 99, doesn't get any better than that. The group rating is a 50, but this is an aerospace theme, and the number of funds is increasing. EPS is increasing, sales is increasing, and if I look at the number of funds, look at that. Fidelity Contra Fund increased their position for the last 2 quarters. Invesco increased their position for the last 2 quarters. Something I definitely I don't want to miss. Archer is one that is on my watch list for the aerospace theme. Why? Well, ARC just took a large position in this, so this is probably going to gap up pretty significantly. I don't think I'm going to have an opportunity to get on with this. I think that Archer, if we look in after hours, gapped up, like crazy. So if it opens up here at the 10 spot, this could be worthwhile getting involved. ARKK, if we look at this, ARC took a position in Archer, and they ran like crazy over on Friday, and so there was just no way for me or Sean to get on board this name. DRS is one that an aerospace theme. This has been showing up continually on my scans for a long time. Can't ask for a whole lot better than this. The fund ownership's a little low, but it is increasing. Return on equity could be a bit higher, but the EPS growth rate is nice. And as far as I think I've got a really good buy point here. So I would look to consider adding more. I'm only about a third size, but this stock has been treating me right since my purchases back here on the Monday, June 2nd, when I got in right around the 42.90 spot. This is one that's also on my list for an ad. If it tightens up and pulls into the ADMA right around the 43.75 level, looks like a good ad. Moving on to the finance side, if you guys remember, XLF was setting up pretty bullish. I think Visa looks really good here over the 370 spot. Paycom, another one, several weeks tight. It just doesn't get a whole lot tighter than this. Paycom also looks really, really good. If you're not familiar with the company, looks great in market surge. Lots of things to like about this. 24% EPS growth, 32% return on equity, increasing fund ownership. Look who it is again, Fidelity Contra Fund in there again. Schwab, this one a triple inside week, right? This looks great. Declining volume as it pulls into the 21 EMA. It's holding the 5 on the weekly. This looks awesome. We look at Schwab, Fidelity Contra Fund, huge increase in their position in the last quarter. There's 2 quarters of buying in a row, and EPS growth rate leaves a little bit to be desired, but the increasing fund ownership and the fact that some major funds are involved in the stock is telling me everything I really need to know. No, I'm not going to argue with the institutions. Institutions are going to be the ones that move the market. I'm going to follow them and be on the right side of the trade. LPLA. As I mentioned, the Improve One scan that I have is the most restrictive, and LPLA. There's only 5 stocks in the entire stock market that check all 15, and one of them is LPLA. I don't know much about this company, but it seems like every fund is buying this hand over fist, and it checks every single box that I would want from a great stock. And so I don't buy it blindly, right? I would like it to be. I'd really like, especially in this environment where we've seen a lot of breakouts fail. I would like it to get it on a pullback. So if I can get it on pullback into the ADMA, that would feel pretty good about those buys. I don't remember if the stock trades a little thin. I don't remember if the options chain has a tremendous amount of liquidity, but I mean, let's just look at this on come on. Huge cup with handle, looks great. Can't beat that. That's one of my top watches. Going through these, JP Morgan, another one that it's a top watch. Bank of New York Mellon. I think this is probably from the fundamental standpoint in CanSlim and the IBD universe, this is one of the best ones. Definitely trades a little thin though, and you'd have to take it with commons, but it did. I did add this to my watch list on Wednesday. It didn't even blink during the Thursday drawdown, and it ripped into end of day on Friday. But it was on low volume, so take that for what it's worth. Interactive Brokers. I think this one had news, but this is also showing up quite well on my IBD scans, and I do like the way that this looks. An ESQ, another one that I don't know much about, but it does have a very tight look, basing this previous weekly level, and so it is also holding at previous all-time highs. If you look here in market surge, it's not checking all the boxes. That's why it doesn't get a green or a blue flag, but this does look interesting enough for me to keep on my watch list. Moving on to software, Monday.com, MNDY. Wouldn't you know it? It's one of the very few, only 5 in the entire stock market that meet this list, and it is that meet all 15 criteria in a super restrictive scan, and and it's coming out of this kind of big base here and a weekly cup pattern, and it's right here up against this pivot now. So again, this how I would get involved here is a little bit difficult because it's not like this one is going to like set up, get really tight, and then break out, because you can see it's not doing that. And also, too, this environment that we've been in is not really conducive to a lot of these breaking outs. Some of these breakouts have been failing, right? Like Duolingo is a great example, and that's probably one that, frankly, I'm going to add onto my watch list again, so I'm not going to miss it, right? Duolingo was one that was also like this, right? You know, I took the Duolingo on Friday for the breakout, got stopped out for, I think like a 2% loss. But this is one that I also want to be involved in. Why? Well, Duolingo meets 13 of the 15 criteria. Fantastic stock. I do not want to miss it. But how this relates to Monday.com and buying something like this is that this is not really going to set up to break out like this. This reminds me an awful lot of Rubrik, how this just kind of never got tight. I mean, you could, if you saw it right here and you're like, I'll wait till it gets tight. It never got tight. It's just respecting the 8 EMA and surfing the 8 EMA all the way up. So did GEV. Did the same thing. So if you want to get involved in these sorts of names that are just kind of surfing the 8 EMA, I think your best bet is to just buy them off of dips back into the 8 EMA and keep risk tight. And once it starts moving in your direction, move your stop back up to your buy point, protect your buy point. Like Mark Minervini says, always be working to improve your worst case scenario, and then make the trade risk free, and then see if you can ride Monday.com to be a big winner. ULS is another one that I like. Man, look at that. Look at these high tight flags that are forming. There's just no shortage of these great setups. This is one that I like seeing kind of correct as through time as the EMAs catch up, and I would be interested in this one, yeah, for sure. With ULS, this one is like, I would like to grab this again in this environment where breakouts are not working. So not all breakouts are working. Some of them are starting to fail, but it is still an environment where you can buy breakouts. Don't get it twisted, but I would like to get something like this on a low risk entry, like here in this pullback. It's clearly respecting the 21 EMA. So let's see how you would have bought something like this, right? Like ULS, you could have bought this like this, right? On this day where it came down and tested the 21, well, it sweeps the 21, reclaims, and then you could have, made a buy right here on the right side of the V and put your stop there at the low of the pivot. And what you would have been risking what? You'd have been risking 1.4% on the trade. And now, if it does continue and work in your favor, by the time it gets up to the breakout level, you're up 5%. And now you have a chance to really add and really get aggressive, because you've got a 5% cushion and you're not nuking your average cost. So that's one thing that I'm also looking at too. Net, let's go back here. Net, this is Cloudflare. I've made money on this stock quite a few times. I don't particularly want to buy it here because of the extension away from the 50 moving average. That's what these yellow dots indicate. So I would like to see a little bit of correction pulling in here. Gotta maybe get tight up against the 176 spot. That would be my preference. Reddit doesn't technically, it's not technically software, but I'm putting it into the software spot. Main reason is because it's kind of setting up this wedge pop, right? You kind of see how this is kind of forming this wedge pop here. This could be a really great setup. So I'd want to know when this gets over 122, because this could be a great opportunity to catch it as it starts into a kind of a stage 2 uptrend. ServiceNow, this is one that I think, obviously it's fantastic fundamentals, but the stock's really expensive. This is like Costco territory, so this kind of puts it out of reach for a lot of people. Even though it is pretty liquid, the options are unimaginably expensive, and so kind of makes it a little bit hard to trade. But if you got a big account, I think ServiceNow is setting up great. Shopify, this one's one that I basically kind of missed, but if the weekly chart just looks fantastic. On the weekly chart, it looks like the move is just getting started. So over 112, I would like but it does feel a little bit far away from the 8 EMA. So I'm gonna have to see how this sets up into the week. If the EMAs catch up a little bit, I could be interested in looking at Shopify. LRCX, this one sometimes is a little bit hard to trade, but I do like this on the daily here over 86. ALAB is another one. It's setting up well on the weekly, kind of coming back into the 21. This could be, if you get a bounce off of the 21, this could be an interesting one to front run, since the front runs have seemed to be been working. AVGO, without question, strongest fundamental chip stock on the market. There is no debate about this. If I wanted to be involved in chips, I'm not looking at NVIDIA. I'm looking at AVGO. I'm looking at Broadcom. I'd much prefer to grab this. The earnings report was not bad. It's now kind of coming down to test this pivot. If it comes down into its 21 daily EMA, then I would like to grab it off that pivot again on the right side of the V, similar to the way we talked about with ULS. That would be a good look. And NVTS, definitely a spec name, like 15 ADR. This is like having a tiger by the tail. I've got it on my radar because it just looks like it could be a huge mover, but I would want to see this get tighter into the 50 and the price action not be so wide before I took an attempt at this. DLO, this one is in the payment processing side. They're based out of Uruguay. They had a big gap up on earnings, kind of sold that and then sold it off to fill the gap. This is one, again, where taking a low risk entry off of the 50 might not be a terrible idea. You could have pretty low risk there, risking 2%, 2.5%. I am interested in some of these names in the leading sectors that have good fundamentals, and the reason why is especially when they're outside the United States, like DLO is one, AS is another one that I have here on my list. But the reason why is because we have seen the emerging markets ETF start to peak up. So take it for what it's worth. It does seem like there's an interest in having investing in companies that are outside the U.S. I'll let you do with that. I'll let you do what you want with that information. And so let's look at. So we look at DLO. I think that's a good one. PayPal is a tried and true trader. Kind of a slow mover, kind of a little pokey. 2% ADR. But it does have this inverse head and shoulders, and I think that over 73.50, like over the 74 spot, could be interesting. Medical, Intuitive Surgical, this is a great one. I mean, this is I think this is represented pretty heavily in the NASDAQ. How is this weighted? Intuitive Surgical is about 1.25%, the 17th largest holding in QQQ. It is a bit of an expensive stock, but the liquidity is there, the institutional ownership is there, and it does meet a lot of the criteria that I look for. Earning stability of 9, single-digit earning stability, I'm interested, right? BTSG, I do have a position on this already, about a third position. I took it here on the breakout at the end of the day, towards into the close, but I'm aware of the nature of breakouts and how they've been working or not sometimes in this environment. So I do have an alert set here just above the 21 EMA. If we tuck back in and test the 21, bounce back off of it, I would look to add into my position there. Pretty low risk add. EXL, another great one. This is kind of in the pharmaceutical biotech side of things. But I mean, look, guys, some of not the highest volume ever, but it is notably high volume on this gap up into earnings, and as you see, we're kind of starting to pop out of this wedge here on the daily as we reclaim the ADMA. This is a good look. Pretty interested in this name over 43.50 is probably where I would look to take a position. Set an alert on that. We talked about CCJ. This is one that is setting up very, very well. Again, meeting an awful lot of the criteria, 14 out of the 15 of the most restrictive scan that I have. Uranium miner, kind of a proxy to getting into exposure into the nuclear trade. I think that's a good look. Just a huge mover. Look at the daily, this daily chart. Why is this not working? There we go. This daily chart, giant cup with handle, pulling back in, basing this 47 spot, liking the 21 EMA catching up here. This could be a good look as well. NNE, same thing. I think the real buy here. I mean, I told myself that I was going to buy it off the 21 and the 50% gap fill. I didn't do it. You just gotta have the stones, guys. You just gotta have the stones to buy these things when they're there, and you set the alert, and the alert goes off. You just gotta buy it. And so it ripped the next day. Live and learn. We're still learning. This is a really, really good with NRG. Meets an awful lot of the criteria that I want to see in a stock from a fundamentals perspective, but these dots are telling me do not touch, because right now it is way too extended from the 50, and I would need to see this kind of correct with time, right? Just base this spot, base this level, and let the EMAs catch up. SMR, another good look. A little too wide and loose here in the price action, but if this gets tight and lets the EMAs catch up, this could be an interesting look. So keep this on watch. That's pretty much it for my top watches. Some side watches. This is one, Amerisports. This one's based out of the Cayman Islands. A friend of mine found this. His name is Josh. He is a brilliant trader, and I tend to pay attention when he finds good stocks. A little bit concerned about the fact that the industry group strength on this is like really low. So I am paying attention to it, but everything else it does look interesting, and the technical setup is great. So we'll see if this materializes. Ulta Beauty, big gap up on earnings, huge volume. Volume was pretty high. Would like to see this kind of base this spot, and then see. This looks like it could take a little bit of time. F5 Inc. Don't know much about this company, but on the weekly it does look good. Like the volume patterns on the daily. I would like to see this kind of pull in and retest this spot, but I'm not going to chase it here. Dynatrace, also another one that I don't know much about. This is reminding me of kind of like the Daves of the world, the Groupons of the world. This is one that I would really like to get involved with. This is kind of a name that a lot of people are familiar with and have traded before, so it's not unfamiliar, but it is a little bit loose here. I don't like these big wicks. I would like to see this maybe come back down into the 8 and 21 and maybe buy it on a retest here of the 8 and 21. Buy it on the right side of the V. A couple other ones that I like to see. Rocket Lab. This definitely stands to be a huge beneficiary from the Elon implosion, and with SpaceX probably getting stripped of its contracts. ASTS, we know that thesis is correct, because my God, look at this stock. That just went crazy when Elon imploded. And how many times did I try this stock before it honestly just went? This stock has taken a long time. Look at this base. I mean, I must have tried this stock so many times in this area, and it will chop you to pieces. But it is starting to set up. This could be the breakout, right? This could be what sets off ASTS. So keep your eye on that stock. CrowdStrike. CrowdStrike's another one here that I think was probably best bought off of the retest of the 21 EMA when it had its earnings reaction. This is one that I have my eye on just for general health of the stock market. This is a true market leader, so you want to see this one hold up. You want to see this one continue to do well. If it sets up to be bought, I will buy it, but this at price action is a little wonky. Kratos Defense, this one I've had my eye on, and this is basically looking very similar to the defense ETF. Basically impossible to buy here with this extension. ZS is my largest position and my current largest winning trade to date. I'm still holding 75% of my core position, and I have rotated in and out of swinging options all the way from my buy point back here. So I've traded this one in and out, But I've held my core position all the way from there. So I'm happy with this trade, but the extension here sold a quarter of it into strength, but I think that was the right thing to do just when I was looking at the Qs and seeing some of the distribution days there. But this is not telling me to get rid of the entire position, right? Because stocks will typically do this. They'll get extended from the 50, and then they'll start to consolidate, build a base, and then make a move for another leg higher. So I'm watching ZS very closely. Why do I have ZS? Why did I have ZS so early? Well, I have ZS so early because it's one of the strongest stocks in the stock market, guys. It just is. The fundamentals are fantastic. The sales are increasing. The EPS is increasing. The fund ownership is increasing. There's a lot of things to like about the EPS growth rate is 72%, earnings stability 14. You know, people are going to point at things like the PE ratio, but like I don't pay attention to PEs. If you pay attention to PEs, you would miss some of the best trades in the world. Some of the best trades in history you would miss if you paid attention to PE. So yeah, I'm going to watch the stock and see if it consolidates, builds another leg higher. I would be willing to add my shares back. But I'd probably instead of adding my shares back and then screwing up my cost basis, what I would likely do is I would likely add leaps. I'd likely add leaps and then layer it with some shorter term 60 to 90 DTE, either at the money or out of the money options, and swing trade those around the core position. SE is one that I tried and whiffed on. Tried it here, stopped out pretty tight. It set back, kind of sold back down into this base, then ripped off, and then sold back down. So I'd have to see the price actually get a little bit tighter here, but and maybe see the EMAs catch up. But SE is one that has fantastic fundamentals, and so this is one that I would love to get involved with if I can only find the right buy point. OppFi, a little bit extended here, great fundamentals. Hood probably going to get sold off pretty hard because it sounds like the market had basically priced in inclusion into the S&P, and that didn't end up happening. And yeah, so this could be one that I would absolutely look to buy on a retest of the ADMA. GEV, another one that I would love to buy. You're gonna have to almost either buy this off the ADMA or hope that it comes back to test the 21, but this one could be gone. Sezzle, another one that will haunt my dreams. I had really, really great serious size in Sezzle, and just kept my risk really tight, stopped out for break even, and then it gapped and ran the next day, and I never caught it again. If I had, I would have been up 42% in 21 days. So I had pretty serious size in this, but missed it, and that just lessons learned. Don't sometimes your highest conviction trades are going to be ones where you want to take a lot of size, but then when you take size, it reduces your holding ability, right? All right, that's my watch list. Other things that I'm keeping watch on just for sector rotation are things like PAAS, Royal Gold, Orla, WPM. I'm keeping watch on these to see if these start to set up, if there's rotation back into gold, and with silver acting the way that they are. So that is basically my watch list, guys. If you have any questions, don't hesitate to message me in the chat. I'm here to I'm here to answer any questions about my watch list or where I'm entering things or how I'm managing trades. And yeah, if you're watching this somewhere else, please join the Options Cartel Discord. Sean is a fantastic mentor. I basically learned everything I know from Sean and reading how to make money in stocks. So I hope to see you guys in the chat, and I look forward to trading with you guys this week. Talk to you soon.